Hi everyone, Chad Shoup here, and thanks for tuning into my video today. I'm going to be talking about the Federal Reserve because once again, they're going to be stealing the spotlight on Wednesday, July 31st, and the comments they make, I'm going out on a limb here, but I think that they will help set the tone for the fate of the bull market as we know it, and they could either be signaling an end of the bull market or allowing it to continue for a little bit further. So before I share with you my thoughts on why I think that is the case today, then I want to get your thoughts on the Federal Reserve and whether or not you think this meeting is as big and as important as the market watchers are making it. So you can just leave me a comment below and I'll be sure to jump in and give you my feedback as well. Now, if you enjoy my content and the information I go over in these videos, be sure to give it a thumbs up to let me know that you like it. And you can always subscribe to my channel so that way you don't miss out on any of my weekly videos. Now, when it comes to the Federal Reserve, this meeting is very important because what we're seeing in the market is that they're dictating that the Fed is actually expecting to cut interest rates, and this is with 100% fact, despite knowing that the Federal Reserve has two simple core mandates through Congress by which they are allowed to act on, and those are full employment and stable prices. And right now we have unemployment at historic lows, so you can argue that we are already at full employment and there's no need to stimulate the economy on that side. And then stable prices, well, they've held consistently below their 2% target rate for inflation, which is what they use to measure prices. So prices are not getting out of hand and unemployment's in check. So right now there's really no reason for the Federal Reserve to jump in and take action to cut interest rates. And that's why this meeting ends up being so important, is because the market wants the Fed to cut rates, but the Fed's not going to act just on what the market wants, so they're going to react based on the economy and the data that they see coming in. So if the Fed does cut interest rates, regardless of whether or not the market was expecting that, it tells us that the economy is weaker than expected, and that the data they're seeing in their conversations with CEOs, and as they piece it all together, they're seeing this underlying weakness build up, and it has them worried about the economic conditions in the United States. So this is very alarming, and it would signal the end of the bull market as we know it, because believe it or not, this quarter of a point cut that everyone expects, it's not going to do enough to turn around a weak or struggling economy. Instead, it's just a sign that the Fed believes that we are heading into a recessionary period. So that would be a very alarming situation, even though the short-term reaction in the stock market may be bullish and send stocks higher. Over the next few months, we'll see that play out as weaker data continues to come in and the stocks start to head lower. But on the flip side of that, if the Fed doesn't lower interest rates and they keep rates the same, which is exactly what no one else expects, it would be great for the bull market because it tells us that the economy is stronger than expected and that they're seeing the strength in the underlying economy, and that it's going to help support the economy, the bull market, and everything else, and there's no need to cut interest rates to help stimulate the economy. So in that scenario, we may get a short-term pullback in the stocks, but that's going to be an excellent buying opportunity because of that economic strength that's going to help lift the stock market. So that's the two ways that this meeting can help determine whether or not the bull market's going to continue or come to an end in the coming months. So this is a great meeting, one that you want to watch. So be sure to leave me your comment below with your feedback. And I don't know about you, but as a trader like me, these big events, these periods of time that are going to create volatility in the market are great for traders because it gives us a lot of edge to jump in and place our trades on directional moves in the stock market to benefit from. And I've placed many recently, and if you want to learn more about how traders are taking advantage of big events like this or other sharp swings in a market, they'll have a link below that you can go to view a presentation on how to jump in on these trades. Now, I also have a link for my full article with my analysis on the Federal Reserve below that you can view. And I want to remind you that you can scroll below, click subscribe, so that way you don't miss out on any of my weekly videos. And if you click the bell, you'll get a notification whenever a new one is posted. So thanks for tuning into my video today. Until next time, I'm Chad Shoup.